Michael Edward here with True Trading Group. January 18th, the streak is still alive. I have not had 2 consecutive red days since the end of September. Had a red day yesterday, very frustrating day for me yesterday. Came back today, kept things tight, was nice and disciplined, scaled back my position size a little bit, and locked a nice little green day. But before I get into that, there's a swing trade setup that I opened today that I want to go over my analysis with you. But in lieu of the NFL postseason, I want to talk about something that is an important lesson that I really want you to pay attention to, because it's one of the biggest mental hurdles that we deal with as traders. And this video is all about trading is like football. What do I mean by that? No one likes getting hit playing football, but it's part of football. Okay, when you sign up to play, you know you're going to get hit. Nobody likes to get hit. Everyone likes to score touchdowns. No one likes to get hit, but it's part of football. Trading, no one likes to lose, but losing is part of trading. And you have to come to grips with that. Yesterday, I had a red day. I was 0 for 3 in the morning. It was an extremely frustrating day. I had multiple failed buy signals, and I got very frustrated. I had to just take a minute, step back, take a deep breath, and say to myself, I need to stay calm. I can't get aggravated. I can't get frustrated. And I'm actually going to scale back my position size. The number one greatest mistake you can make as a trader is increasing your position size after you just come off a big loss or a string of losers and you're just not feeling it. It's the single greatest mistake you can make as a trader. After a big loss or after a string of losers is when you are the most dangerous to yourself. It's when you're trading with emotions. When you trade with emotions, you make bad decisions. When you make bad decisions, you lose money. Okay? It's a lot easier said than done, okay? But it's probably the single most important aspect of trading. And if you can come to grips with losing as part of trading, you'll be able to deal with the red days or the red trades a lot better. Okay, rather than feel like, oh, I lost money and you're aggravated. If you place a trade and it's a losing trade, focus on keeping that loss small and sticking to your stop losses and being disciplined. And you can walk away from a losing trade and still say, oh man, okay, I stuck to my stop loss. I only lost 6%. I could have lost 12. It could have got out of hand there. I did a good job managing that risk. I made a good trade. And that'll help keep you in the right state of mind to continue trading, rather than feel like, oh man, I just lost money, I'm pissed. It's part of trading. It's your job as a trader to manage that downside and to keep those losses small. And that's why I always recommend, after coming off a big loss or a string of losers, take your position size and scale it back. 2 reasons. 1, you're just not seeing it. Okay, and if you're not seeing it, you're cold. You shouldn't be pushing. You should push when you're red hot and you're in the matrix and you're in the zone. That's when you should push it. That's when you should increase your position size, not when you're off, not when you're coming off a big loser. Because a lot of traders do that because they feel like they have to make back everything they just lost in one trade or in one day. You don't have to do that. That's how a manageable red day turns into an absolute disaster. And you can't ever let that happen. Okay? 95% of the time when you have a disastrous day, it's not because you made such a huge mistake physically. It's because up here, you got screwed up here and you broke away from your discipline and you let a manageable red day turn into an absolute disaster. It's going to take you a week to make back. Don't ever let that happen. Okay, that's why I suggest scaling your position size back. So not only because you're not, like I said, you're not seeing it, but reason number 2, it'll help you trade with less emotion going forward. You're going to be frustrated. You're going to be upset. You're going to be angry because you just lost. If you scale your position size back, it'll help you trade more freely. You won't feel the same level of anxiety because you have less money riding on the trade. You have less money on the line. If you're wrong, you're going to lose less money. It's going to be a little bit easier for you to trade with a clear head and make the right decisions. Okay, that's why I recommend scaling your position size back. So yesterday I did exactly that. Okay, I had 3 losers in the morning. I took a break. I walked away from my computer, got a glass of water, took a little walk, took a deep breath, scaled my size back, and I caught two nice little trades in the afternoon. I didn't make back everything I lost in the morning. I was still finished the day red, but I made back a nice chunk of what I was down. Okay, and it turned out to be a very manageable red day. And then I came back today, kept it tight, and locked in a green day to keep my streak alive. Have not had 2 consecutive red days since the end of September. It's now January 18th, and the streak is still alive. Okay, so that's a little mental lesson that I wanted to talk to you guys about because it's extremely important, and it's something that is probably the hardest thing to do as a trader, but we have to stay focused on that. Okay, now let's get to a swing trade that I just opened up today on ICON. Okay, I opened up this trade right before the bell, not right before the bell, maybe 10 minutes before the bell, before the closing bell at $1.61. Real strong stock today. Held up, traded above VWAP the entire afternoon. Here's your VWAP, guys, on this icon. You can see it held above it all afternoon as it just kind of pushed higher and held that big gap up in the morning. The stock didn't really even have any news. There's just speculation that they're going to beat earnings. They're slated to release earnings on, I think it's February 28th, so we have a long way to go. I'm not holding this until then, but a lot of retailers have been beating earnings lately. GNC just beat earnings. So you're getting a lot of people that are thinking that the icon is going to beat earnings, and I think that's why the stock gapped up today and had a nice move. And I got long at $1.61, and I'm going to take you to the daily chart and show you what I really like about this icon trade. Huge volume. Okay, real nice strong volume bar on this gap up. The stock held the gap up and actually closed above the 50-day moving average. The 50-day on this is $1.59. It closed at $1.62. And as I scroll back, you can see back here how that 50-day moving average was such obvious resistance for this stock, never able to get back above it a couple months ago, and now we just popped its head above that 50-day and closed above that 50-day, which is a nice sign. Stock hasn't closed above the 50-day in quite some time, several months. But what I really want to talk to you about is the MACD indicator. And to do that, I'm going to squeeze this volume out of here so you can see the MACD more clearly. Here's your MACD indicator. This is very strong bullish divergence in the MACD indicator. Okay, you can see the MACD is on a steady uptrend ever since November. Okay, but the share price in Icon has been dropping ever since November. Okay, you can see here the share price in Icon decreasing while the value of the MACD is increasing. That's called bullish divergence in the MACD. One of my favorite indications for trying to catch trend reversals on swing trades. And that's the main reason why I like this icon as a possible swing. We also have, it's approaching that zero line. So when the MACD crosses over that zero line and goes from negative territory into positive territory, that's also seen as a bullish signal from the MACD, and it looks like that might happen in the next couple of days. So with that bullish divergence on the MACD and possibly crossing over that zero line, I like what I'm seeing from the MACD indicator and part of the reasons why I entered the trade. Now let's talk about the RSI. Okay, here is your RSI indicator down here. Again, bullish divergence on the RSI. You can see the RSI, just like the MACD, is in a nice steady uptrend since December. But the share price has been decreasing the entire time until today. Okay, that's bullish divergence in the RSI. Share price is decreasing while the value of the RSI is increasing. Bullish divergence. So now we have bullish divergence on the MACD. We've got bullish divergence on the RSI. We have a heavy volume gap up that held and pushed higher in the afternoon. The stock traded above VWAP all day, and it just closed above the 50-day moving average. There's a lot in our favor in this icon. Okay, that's why I pulled the trigger. I entered the trade long, swing trade alert, January 18th at $1.61. Okay, and I'll update you guys on the trade, and we'll see what happens, and hopefully we get a little bit of a continuation move tomorrow or the day after. My first target on the trade is $2. So again, long from $1.61, looking for a move to $2. I'll update you guys as we go. See you in chat tomorrow.